So not all that long ago, we had a discussion about earnings right before the financial earnings were coming out. And the reason we did that is because a lot of futures traders overlook the fact that it's very, very important to think about earnings when they are setting up their futures trades, because certain stocks and certain sectors are going to affect the indices. So earnings isn't just a stock and ETF phenomena. It affects futures too, because if you're trading ES, YM, RTY, and Q, you're trading a bundle of stocks. So we start with that foundation, and then we realize, yes, as futures traders, earnings do affect us. What I call earnings season as an ETF and index trader is a tail wags the dog season. In other words, a stock, even a low-weighted stock, if it has a disproportionate price move, can affect the ETF or the index. So the stock can affect the larger index or ETF. It's not unrealistic to see that. So let's keep in mind, this is not only a stock strategy, but it's a strategy that will influence how you view volatility in your futures contracts. Really simple. Along the left side, I have the notes. What I call them are 6-4-2 earnings. What that means is that I'm going to be looking for trend pullback, trend following plays as the market's attention is heightened due to the earnings release, right? So we look for rallies into earnings in these double green names. Now, if you already know what double green is, you know there's an indicator that runs along the very bottom of my chart, on all my charts, whether they're little dots or squares or triangles, whatever it is, you'll see there's 2 rows of colors. And what I'm looking for are different markets 6 weeks out that are already trending. So we know when earnings are, right? We know when earnings are in a specific market. And we don't start the earnings countdown 1 day out, 2 days out, 1 week out. We started a month and a half out. And that's the one thing that a lot of traders miss, that your best moves, low risk, not the threat of IV crush, smoother, and I believe also more predictable. Now, I believe it. I get it, gang. I believe a lot of traders love the no pain, no gain, no guts, no glory of taking something into the volatility of the earnings hot zone. I get that. It's the same thing with the non-farm payroll hot zone or a central bank event or Jerome Powell speaking. Any of those hot zones are going to create high volume, high volatility. This is just one of them. But the more predictable movement is going to occur in a trending market, double green, which you'll see down in here. This is the structure of the 8, 13, and 21, and this is the structure of the 34. When I have a double green market, starting 6 weeks out, even into the 4-week window, that's the sweet spot. I like that 6 to 4. Even 3 to 4 weeks out is okay. But remember, the less time we have until the earnings day, inside 2 weeks gets troublesome because now I have less time. I need the trade to fill and follow through in 2 weeks, which is roughly 10 trading days or less. That is then going to leave me very little time to see the follow through that I need and then get flat by earnings. So that's why I like starting so far in advance. So if you were taking a look, for example, at Intel, which is coming out with earnings, you see that there. There's your earnings. Am I looking at Intel today? Oh gosh, no. Yesterday? Oh gosh, no. So here's how we do it. Grab your handy dandy little vertical line. All right. And then what you want to do is just map out 2 weeks, right? 2 weeks. So 2 weeks from today, or 2 weeks from yesterday was the 8th. Okay. So go back to 4/8. All right. 2 weeks before the 8th was, as you can see here. Oh, did I get the wrong? Yeah, there's 8th. It takes you to March 25. All right. And then 2 weeks before March 25, right, was the 11th. So 6 weeks before earnings, which is this one right here, we'll paint this one red just to, kind of remind us that's where we want to be out by. All right. Do not take things into earnings. The 2-week cutoff, go ahead and make yellow. And I think I got these dates right, but just in case I didn't. So you want to go 2 weeks, right? Another 2 weeks, and then another 2 weeks. And then you've got 6 weeks. Starting 6 weeks out, right here. Now it's a very simple question. Where the market's double green. Look down here at the indicator where the market's double green. Yahtzee, we're good to go. Pullbacks like this, that's what you want to take advantage of. It's just that simple. And then you might say, okay, Rog, but where do we get out? What's the timing for the exit? I mean, clearly we want to be out by earnings, yes. But if I got long here and I've got a swing high here, well, that's my exit. Near-term swing high. I mean, I'm giving you guys this step for step for step. So the real gem of this is to understand the underlying market structure. Okay, so big thanks to whoever asked me to do this in the chat room. But those of you that have been following my work, you guys know 642. This is how we do it: double green, 8, 13, 21, and 34 EMA. Starting 6 weeks out, we look for that structure. We just buy the pullbacks, we play them to the swing high. We buy the pullback, we play them to the swing high. And that's what we do with the goal to not be in the market at earnings. Now, you might say, Rob, can we buy this? You actually can. You actually can. But inside 2 weeks, I like to say no. I mean, it's really up to you. I mean, I can tell you can't do it, right? I'm not your mom. But the reason I have this yellow caution 2 weeks out is what happens. I'm running out of time, probably 10 trading days or less. The implied volatility is going higher. There's not a lot that I want to do inside 2 weeks. So at the two, I might tell someone, yeah, 2 weeks, even a day or two. We did not touch the wave again until what, 4 sessions after that cutoff. So that is a no. That is a no. So again, I hope you guys benefited from this because it is remarkably simple. So you might say, Rog, this sounds like every other kind of trend following conversation we've had in futures. That's true. And when we talk in the premium video, what I'm going to do is start to talk about which earnings do we watch as futures traders. Now you know the process. It's simple, right? You know, I taught you how to trade earnings in 7 minutes. Boom. I mean, what more could you want? But here's where it gets a little bit more in depth and helpful. Which earnings do we watch? Which markets could have that disproportionate move? How do we know which markets could affect our futures trades? All right. And how do we use that volatility to capitalize on what, say, a heavily weighted stock like Microsoft, Apple, Facebook, Google, Tesla, Amazon, Johnson & Johnson, UNH, Caterpillar. Think about the different strong, heavily weighted names. I'm just going through the list in my mind of top weighted names in the averages. Home Depot. How do we make sure that we're not getting blindsided by these? Because what happens is, number one, if you know there's going to be a heavily weighted stock like Apple coming out with earnings, and if we don't have a 642, well, it's really easy to forget to pay attention to Apple. And yet, if Apple has a really, really volatile earnings, guess what's going to be affected? Again, we're not that far from earnings, are we? S&P, NASDAQ, Dow, they're going to be disproportionately affected by Apple. So that could give us futures setups. That could give us even ETF setups in something like XLK, where Apple is heavily weighted. So the implications of earnings season are far more than how to trade earnings, but they also kind of inch you into, well, what kind of risk and what kind of opportunities could I then get in the indices? So I hope that helped explain what it is. I've always made this freely available because I think it's a really basic approach, and I hope you guys start thinking about this. And in the premium video, I'll dive into the site, a free site that I use, so I can track these really, really easy. Okay, that's it.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me